Hello, 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 everyone. Mike Arnold here, co-founder of Trading Partners, along with the soon-to-be on Bob Iacchino to discuss CPI this morning. I'll get to hellos in a second. I want to get Bob on quickly. CPI numbers super ugly. We're going to get Bob's take on that. We'll get through all the other stuff later. Just refresh the FOMC 16% probabilities of a 100% basis point. The 75 is baked in completely at 84%. So that changed rapidly. Red across the board. Let's just bring on what everybody is here to see, Bob himself. Here we go. There you go.
I don't think everybody's here to see it because I didn't tell you, even you, that I was coming in this morning. But
It sounded good.
you probably guessed it. Okay, so first of all, we start with Europe, where inflation numbers were pretty much as expected, a little bit better of an unemployment rate in the UK, but German inflation really untouched. ZEW economic index, economic sentiment indexes collapsing in the EU and Germany, negative 60.7 on the economic sentiment in the euro area. The forecast was negative 58.3. Positive is a positive sentiment, negative is a negative sentiment. We're now down past that 50 level. I mean, we were down below it last month, but to get into the 60s, that's got to be one of the lowest on records. And then we get this U.S. inflation figure. Now, as Michael detailed after I'm gone, the inflation figures, believe it or not, that's way, way hotter than expected, only because of the anticipation of the market. I said on this live stream on Thursday, it wouldn't shock me if it came in even lighter than his forecast. And so his forecast month over month as a headline at down 0.1, I said down 0.2, down 0.3 wouldn't surprise me, because if you're looking at what fuel inflation did, which was really the only thing down last month. If you look at the breakdown of last month's number, fuel was lower, and there was a little bit of easing in education, which I suspect has to do with people going back to school as opposed to being at home. And apparel was down ever so slightly, which has to do with high inventories. And that'll likely continue. But nat gas was higher, offsetting the gasoline drop. As Michael talked about in more detail, there were components that are very sticky, okay, like insurance, healthcare, food was up, which I think surprised a lot of people given how low things like corn and soybean have gone down. But the thing that's amazing to me is the Fed has been telling you not to ignore this. They're going to keep fighting inflation. I'm not saying they knew the number, but you fight the Fed at your own peril. Even if inflation was a little bit lower and the Fed was still stern, you have to start to price these hikes in. And now the market, which I honestly think is an overshoot, as Mike mentioned, is now actually pricing in the probability of 100 basis points in the September meeting. And there's now a 75 basis point hike being priced in to the November meeting. So if you look at the current rate, let's go from the bottom of the current rate, which is 225. 75 basis points would make the bottom rate 300. Okay. And if you go to the November one, we've now got 375. That's a 49% chance.
Yep. I have it on the screen for everybody. Yep.
Yeah. Highest probability would be right now, they're pricing the highest possible probability. It's nowhere near where it's baked in, like Mike said, on the 75 for the September meeting. But the highest probability is now of at least 75 basis points. Any pivot or pause, Jim Iorio likes to use pivot, although if you listen to the last podcast, he finally admitted that that's the wrong word to use. There's no pause coming in November, according to the markets. That's all I got for you guys.
All right. Well, yeah, anybody who says still is on the bandwagon beating pause or anything else is absolutely ludicrous. They got to get that to 4% by the end of the year.
Now, I set my bond pricing prior to the number. So the 10-year prior to the number was at 332. It's at 344 now. So it was down 5 basis points. It's now up 7 basis points on the yield. So
Yeah.
just using 10-year as a proxy. Look at the 2-year. It was down 5 basis points at 353. It's now at 374.
Yep.
You know,
374. And you said the wow, these
so if
are
you look at
some
the
rip your
run
face off rallies and bonds.
from yesterday's settlement, that doesn't count the 5 that it was lower. So it's 21 basis points higher than it was prior to the CPI number.
Look at this. Even the 3 month up 740 basis points on the 3 month.
Yep.
Wow.
Yep. Huge.
Oh,
Huge,
this,
huge. Those are huge.
yep.
You don't see,
So
you don't ever see those.
no, this.
Morning, John A. Sorry.
Wow.
I'm just
So
looking to see if there's any questions for me, Mike, before I
let's
jump. I take
see. Let me
my
just see. Okay. I'm not even gonna discuss stupid in here. What the heck just happened to the NASDAQ? It was called CPI.
yeah, it's CPI, dude. Come on, get your
Uh,
coffee and come back.
I don't see any questions really right now. It's just Bob, what would the downside to going long yields be here?
Well, I mean, everything, if you look at Mike's charting, everything extends to a certain level and then just naturally calms down. So I guess the downside would be are you talking about, wait, okay, hold on, I want to clarify. Talking about long yields or
Yes,
long
going
futures tracks?
I guess that'd be long yields, short bonds.
Okay, so short bonds, long yields, your only real downside is a pullback into the rotation zone, stopping you out before it continues to go back higher. So,
I mean,
yeah.
yeah. I mean, we technically, after that close above the 62 and a half, we've now hit the probability areas for that full move, but you're also trading with the rotation zone. I mean, you got to trade with the trend at this point.
Yep.
You had to trade with the trend since we were counter trend for a bit because we had a topping pattern, but ever since it closed above the 62 and a half, you had to go with the higher yields and lower bond prices.
Now, the other thing is, it wouldn't surprise me to see a little bit of a recovery on yields, meaning lower today, a little bit of a recovery off the lows on stocks, because a lot of this is exiting positions that have been bad.
Yep.
But I don't know about everything turning back to where it was. I do feel like Friday was a momentum shift, but actually said this on Bloomberg yesterday. I'll post this on my Twitter once they send me a link. Friday felt different, but whenever I trade by feel, the move tends to not last as long as my gut tells me it's going to. So that's why I don't trade by feel. Trading by feel, by definition, is trading by emotion. It's your feelings. And we all know that doesn't work out. So,
Hey, Bob, did you know CPI is fake?
yeah, I did. Yeah. Thanks, Tom. Appreciate it.
Bob, for every $1 in Fed balance sheet roll off, what does that correlate into dollars on the S&P?
I don't think it does correlate directly. I mean, they're going to roll off like 95 billion, 1/100th of a cent. I don't know.
Hey,
I've
what?
never seen an honest correlation to that. Now, by the way, the quantitative tightening will take longer to affect the market than rate hikes will. But even when they do pause on their rate hikes, quantitative tightening will continue to tighten financial conditions. It just doesn't take as long. So,
Yep. Hey, you'll be on again this afternoon, right?
yeah, I'll be on this afternoon.
Hey, options. We'll get Bob's thought on the Ukraine-Russia situation this afternoon. I don't want to take
Yeah,
up time now. We'll get other things not CPI related.
I actually do have a very strong opinion on that options 22. So if you're here, ask the question again. If not, listen to the recording if someone else asks that.
All right, so that's where we'll sit. I just want to get through some key levels.
I gotta go.
All right,
I gotta
thanks
go.
for coming on,
All right,
Bob.
guys. See
All
you.
right. Well, there you go. Thank you for. I'll get back through the comments. If there's anything worthwhile, if you're new here, please do consider subscribing to support the channel. Hit that like button if you want to see more of this content. Sorry, options. I just want to keep it on track today because the CPI again. You had stuff like food up 11.4%. If we didn't have the gas price reduction, the CPI would have been through the roof. It was already pretty friggin' hot. Just for the point of completeness, no earnings today. After the close, nothing I'm personally looking at. Remember, we're wrapping up earnings season. We already went through the Fed watch, red across the board. Any rallies today will be looking to be sold. We are in negative gamma territory, which amplifies still upside and downside moves. So remember, we returned to neutral. We're back in that area today. My very minor, I don't think it will overshadow anything with CPI, but you do have the IBD, economic optimism number at 9. So if anybody's looking for a ray of hope, if that might come in better than expected just because it's wrapping up the summer. So keep in mind you might get a slight bounce off there. Right now, down 240 basis points in the S&P, 305 in the NASDAQ, 187 in the Dow, and 290 in the Russell. Taking out, it was an aggressive sell below yesterday's low. Well, I don't think it was that aggressive because you got plenty of warning. Coming up here between the 50 and the 62.5. And look how well, this is fascinating. Look at this going into the CPI. Look at that 62.5. Look at that. You look at the little spike. I don't know who was buying off that CPI number as a gut reaction. Maybe it was a typo. But boom, and then slam. But right between that 50 and 62.5 and the rotation back down, this should be topping in the daily rotation zone. So we should see, unless something really strange happens, we should see some continued downside price action. What's interesting, though, is weekly cycles at the low. So we might go into some more choppy mode. We have the rate hike decision next week, next Wednesday. So we can see some follow through. What am I watching for today? Let's see. Oh, by the way, there's a couple other comments here. I'm going to be watching if we break from the 9th lows. The 9th lows targeting the gap fill. Okay, the gap fill on the S&P. I mean, this is already a substantial move, so we might go into some choppier price action during the day. You might get a slight little bounce for, I don't know, people like TomTom. Next key level is at 4,005. Remember, we also have massive OpEx next week. Massive OpEx, and that key strike is 4,000. That's also with cycles. This might be a magnet price going in through, could be with next week. So don't get overshadowed by that since we've had this massive downdraft. Again, it's a confirmed sell/short on the close below yesterday's low, which had to be traded roughly on the break this morning or with the momentum play. Key areas for the NASDAQ coming in with this 12,419, 12,420. Below that, my next target is the gap, the full gap. Some people will still be targeting the highs from all these gaps, so that might get a minor bounce, but the full target, and not necessarily just for today, 12,321. I should jump back and just say what I'm watching for on any bounce moves. On any bounce moves, I'm just using some of these old levels. Let me get on the reverse harmonics too. Again, that's where it's challenging. I wanted to do some of this, but it was better to have Bob on with his thoughts. Here's where I'm using, since we already rotated between the 52.5, we've already returned to the 50%. So this is a great place to use harmonics combined with price action. So I have 4,058 on a bounce to about 4,065. Besides using very short-term harmonics, this is our extension harmonics. This is where I'll use retracement harmonics, moving back up, and key price action. This 4,058 is also the key close from Jackson Hole. and the flat 200, the flat 21, the flat 50. So that is major resistance on any bounce. And slightly above that says 4065 area. And you see this 50%. So that's how you can update all your charts. Part of the thing in here, again, the NASDAQ between the 50 and the 62.5. You got to learn to make these levels yourself. So you can do this without me. But coming back down, we got this 420 level I already talked about. Before that, we have the key close of 12,321 on any rally. I'm utilizing this level, this 12,503. So 12,500, 12,503, and then above that would be 12,587. The Dow, again, between the 50, 62.5. Once you learn the probabilities, are they guaranteed? No, they're probabilities, but you got to trade the probabilities. Straight down that 50%, boom, right there. We break below that. Same story, targeting the gap fill. The gap fill would be 31,766. Then below that would be the 62.5, which you can follow along at home with your charts, 31,665 on any rally. Key level I'd be using right now is a prior harmonic right here, prior key level and the harmonic 32,100 on the more level. Anything shorter than that would be the harmonics. Already trading down to key support again, 50 to 62.5. I hope you're seeing the patterns in the markets. We've already hit the 50% level again. There's no gap. So the next major target besides using your shorter term extension harmonics, 1832. Resistance is 1869. DAX, no close above the 62.5 on the daily basis. DAX holding up a little better, but watching for the rollover play now. My level will be, you can do your shorter term harmonics on here too. Remember, we completed that double. You take off the longer term. My next area would be about 13,200. Notes, we went below the 87.5. I was still talking yesterday, watching for that, and we're breaking down my next target, 114.19, and then 114.08. Any bounce now, major resistance coming in, 115.14 to 115.16. Dollar index, strong bounce off this. I talked about this. We'd had a potential daily buy, had to be traded on the break. It's going to confirm it pretty much on the close with cycle bottoms. I also talked about yesterday, back to the weekly rotation zone, watching for the rotation back up. So we definitely have that. VIX, my next key area is 25.22 and then 25.86. A daily close above 25.86 favors the continued sell-off. Crude, topping here against the rotation zone, watching for the break below 86.70. That's the only downside play right there. We'll take a look at some of this after. Japanese yen, really strong rotation back up. Watch for the retest of 144.93, and this is a great way on the break higher to use your short-term harmonics. 145.86, next major target. Euro, major reversal on here between the 50 and the 62.5. Again, next target I'm watching for is back to this 99.90, 99.80 target. Bitcoin down over 1,000 after the 62.5 to 50. This is also an aggressive sell mode again. Tesla, if we get some buying in, just going to watch for the partial gap fill. Other than that, on the breakdown into the open below roughly about 291.50, targeting the gap fill back to September 8th, 289.26, and then 280.65. Close below that, at least on a 4-hour basis, 270.71 are the targets. The spiders, after the stop raise, first target hit, back to that 50 to 62.5. Doesn't look like this final target will be hit. I'd be exiting anyways based off of that. We looking like we're going to fill this whole gap fill. It's 438. That would be the next target lower. Is the gap fill from September 8th. would be the key area, and then resistance 402.48. Those are the levels I would utilize for the spiders. Let's see. Yep, and look at that 50% level. I would really target this 50% level on increasing downward pressure. And you have that 402.48 and the harmonic 402.99. So those would be the key things on the wider moves. We'll put those back up if it sustains itself. I'd rather get to the pullback levels right now. 302.01 rally, 303.50 to 303.99 support. There's just a minor squeak gap fill, but that's going to still be a magnet price, 350. And first level support I'd use is 398, so 301 on your Qs. That's where we sit. Sorry I did not get to say good morning to everybody. Let's see. They're not going to go 100 basis points. They'll go 75. The thing they do is if they're going to go stronger, I think they're still going to do 75, 50, and then December will be up for grabs. No, to completely disagree, Sterling. The VIX rising yesterday, it was not because it was for hedging purposes. We talked about that. It wasn't because anybody knew what the CPI was going to be or that it was going to be this big of a miss. It was for hedging purposes. So people were hedging going into the move, especially after this rally. So it wasn't that anybody knew the CPI was going to miss. Actually, I do somewhat agree with that. From Kalani, thank you for being here. Everybody sees cheap gas and thinks inflation is over. Again, there's a lot of embedded inflation in these numbers. Lots of embedded inflation. That's what is key. That's what the Fed's going to look at. It's not like one bad thing ruled. Yes, housing is very lagging. Okay? And housing had a major component, but other things that is not as lagging, like food prices, still super strong. That's what the Fed's going to be focused on. You know what? I think the market might go into choppy pause mode as we get into next week with the Fed rate hike, but still people wanted to buy the dips. It's still so friggin' ingrained that people want to buy the dips. It's gonna take a while. It's gonna take a bit to really get this mindset out. I mean, we still have this. SPY will hit 420. CPI is fake. But I'm not just saying that we already know Tom. He's going to repeat the mantra, but that's not just Tom saying that. Okay? That's an asinine comment too. Won't be surprised today if we close green. If we wipe out a 220 basis point move on the open with this hot number, then I'd pretty much have to. If we wiped out this and closed above the 62.5, yeah, we'd have to go long. Other than that, that's where we sit. AP World's amazing. Where do we sit? Yeah, quad witching is next week. So, and that massive strike is 4,000. I'm watching. Yeah, short to pops is what I'm watching for. Let's see. I'm just catching up. I went through the targets on the spider. Andrea, does anyone TOS account not showing the gap in the daily ES chart? I don't have my TOS up right now. Can somebody else fill in? Where else do we sit? Yeah, I was just gonna say it's my receipt for $100 at the grocery store is minuscule. You're welcome, Josh. And I was going to talk about some other stuff, but I got to get prepared for the open again. don't be caught. We might get a slight bounce in the open before some renewed selling. But this would be watching to sell the rallies, especially with daily cycles at the top. Don't be caught off guard. And remember, you can also use one thing I've talked about before. Let me just pull off these larger. You can use single bar harmonics. You can use single bar harmonics if you're trying to fine tune some minor levels. So since we're getting a little pause here, you see this little pause? So if it does bounce, you could watch 40.48 going into the open. Remember, we're way overextending. Look at that with the 5-minute rotation zone. So my levels now with this little bounce, if you're going to get the continued upside bounce, this is exactly how I'd use the minor levels. I already went through the major levels. So 40.48, 50, and then 40.58 would be the two key things we're opening right now that I'd focus on. I'd do the same thing on the NASDAQ. And now with that little pause area, let me just show you. Then I got a jump. We got this little pause area. So we break down below 40.26. Your fine-tuning your next levels will be 40.12 to 4,006. There you go. That's exactly what I'm doing going into the open. And I will talk to everyone later. Have a great trading day. Bye.